Good afternoon and morning, everybody. Thank you for joining us today for Hickey & Associates complimentary webinar on the California Competes Tax Credit Program. Today we are going to discuss the California Competes program, including the current round of funding and what companies can expect should they pursue these tax credits. Just a few quick items before we get started. As you may have already noticed, everyone is muted upon entry as they join the webinar. With that, we want to encourage all questions throughout the presentation, so please use the chat feature at the bottom right of the screen. We'll also open up for a Q&A session at the end. In addition, we are also recording today's webinar, so following the presentation, if you are interested in having a copy of the webinar, we will have that available for distribution. Feel free to contact me directly via the contact information that will be found at the end of this presentation, as well as via our social media platforms. As you can see, first off, we're going to briefly discuss Hickey & Associates, our background and our history. Then we're going to dive into the California Competes Tax Credit Program. Finally, we will have the Q&A session where any additional questions you may have, I'll be happy to answer them. So Hickey & Associates is a full-service global site selection and public incentive consulting and management firm. We've been assisting companies in site selection, labor analytics, as well as securing, managing, and administering public incentives for almost 30 years now. H&A has also received a variety of awards and recognitions such as Site Selection Editor Source for Incentive Data and Information, as well as the Cornet Global Economic Development Deal of the Year Award for major projects and deals. Founded in 1986 as one of the first companies to offer integrated site location and workforce services, H&A has now grown into the global leader and has active projects in 7 countries utilizing our more than 50 professionals with additional subject matter experts in key global markets. Here you will see a slide that will give you a good understanding of when a company should pursue public financial incentives. And the answer is quite simple. Whether a business is in the initial entry, expansion, consolidation, or close down phase of the business life cycle, there can almost always be incentives available. Now let's discuss the California Competes Tax Credit Program. The California Competes Tax Credit Program was created in July 2013 by the signing of Assembly Bill number 93. The purpose of the bill was to replace existing California incentive programs with the new Economic Development Initiative. The initiative created location-agnostic tax incentive programs for new and retained businesses, which includes California Competes and others. California Competes is the centerpiece of the Governor's Economic Development Initiative and is administered by the Governor's Office of Business and Economic Development, or GO-Biz. On March 9th, the Governor's Office of Business and Economic Development will announce that Round 3 for fiscal year 2014-2015 is open to applications. The deadline for submittal of applications for Round 3 is 11:59 p.m. Pacific Time on April 6, 2015. This is a hard deadline, and all of those wishing to pursue a California Competes tax credit in this round should keep this date in mind. Round 3 of fiscal year 2014-2015 currently has $45 million in funds available, plus any potentially unallocated funds from the current round, Round 2. California Competes has 3 rounds of funding for fiscal year 2014-2015. Round 1 completed in January, and round 2 is currently being evaluated. In total, there are $151.1 million in funds available for fiscal year 2014-2015, with round 1 allocated $45 million originally. Once again, the current round 2, is allocated $75 million, with the award date being April 16th, 2015. Now, round 3 is scheduled to open to applicants on March 9th, with the submittal deadline again set for April 6th, 2015. And there is currently $45 million available, plus any of the unallocated amounts from round 2. The committee hearing is scheduled to be held on June 18th, 2015 for round 3. In the allocation of funds, California Competes has a 20% cap on the amount of funds an applicant can receive per fiscal year. And California Competes has also reserved 25% of the total available funds per fiscal year for small businesses. Small business are those businesses that have gross receipts less returns and allowances of greater than 0 but less than $2 million in the prior tax year. Now, California Competes is structured in this way. It may be realized in full each year upon meeting the agreed upon milestones. However, if a company fails to meet a milestone in tax year 1, the company will not receive the tax credits for that tax year. But if the company meets the total milestones by the end of the agreed term, the company can capture the full amount of allocated tax credits. So it does allow for some flexibility there. The tax credits may also be carried forward for up to 6 years and applied to corporate income taxes only. Furthermore, the allocation of the credits to a business will be set forth in a written agreement that will be drafted by GO-Biz and executed by the company prior to the final decision to be made by the California Competes Committee. There are aspects of this agreement that can be negotiated, and we will touch upon that a little later in the presentation. Now, this is what can be expected by any company who wishes to pursue California Competes tax credits. The program follows a structured process to accept, review, and approve all applications. Following the April 6, 2015 deadline, California Competes will begin evaluating the individual applications. The evaluation process will occur in multiple phases, and all decisions are finalized in the California Competes Committee meeting, which is a public meeting, and again will be held June 18th, 2015. The anticipated time from submission to award tends to be 45 to 90 days, but we're seeing it being closer to the 45-day mark in the prior rounds. The first phase of the evaluation is phase 1. In phase 1, any application that indicates that it is a retention project will automatically progress to the next phase, phase 2. Now, a retention project would be a project that states specifically, absent the California Competes tax credit, the project will occur in another state, and our California operations are at risk of relocating outside of California. There are some changes this round compared to the last round to this question. They have allowed some flexibility in companies making a firm statement of yes or no. You can now state we may, and that is due to the fact that many companies, although they did in fact desire to potentially move away from California, they were not comfortable stating firmly that they would. So now there is this flexible option for this coming round. During phase one, applicants are required to submit a detailed description of the project, as well as the base data points on the project, such as project investment, new full-time employees to be hired in California over the next 4 years, and projected compensation of those new full-time employees. These required details will create the narrative that will help shape the project moving forward, and it is important for the narrative to stay on message of the project. In addition, all applications are scored in phase one using the following formula. The tax credit amount requested divided by the aggregate investment plus the aggregate new employee compensation. This score is used to determine which non-retention projects progress to phase 2A. California Competes sets a maximum ratio for an application to move into phase 2A, which is not fixed and varies during each application period. Top-ranking applications whose aggregate credit request totals at least 200% of the available funds will be moved to phase 2A. For example, with $45 million available in this round, a minimum of $90 million in credit requests will be reviewed. Moving on to phase two. Phase two will evaluate applications on a more detailed level using information provided in phase one, but also looking at the extent of unemployment and poverty in the specified location of the project, the economic impact on the state and local area of the project, the strategic importance of the project and company to the state and local area, what are the number of retained employees, what are the opportunities for growth and expansion of the company and project, what are the salary and benefits offered by the company to its employees, as well as any other incentives available to the applicant, including those incentives that are offered by other states. Regarding the detailed information that will be requested by the state in phase two, this centers around the projected investment and the projected new full-time employees that will be hired in California. Some of the information that the state will want to know in this phase includes the amount of machinery and equipment that will be purchased in 2015, 2016, 2017, 2018, and 2019. They're looking for the investment classifications as well as the employee classifications that are going to be hired. They want a great amount of detail. For example, on the employee side, they're going to ask for detailed benefits as well as hourly and salary pay of the individual employee classifications. So they will want to know what are the benefits and the average salary that your administrative staff will have in California. Now, once the applications are evaluated in phase two, GO-Biz will recommend tax credit awards for the chosen applicants. The recommended amount may be the amount requested by the applicant or a lesser amount. Now we come to the negotiation phase. Typically, once a tax credit award has been recommended to an applicant, there's a 1 month period of negotiation that can occur. The state is willing to negotiate certain aspects of the California Competes tax credit agreement, which include the minimum annual salary, the cumulative average annual salary of the full-time employees hired, as well as the allocation of the tax credits. However, it should be known that the state is reluctant to allocate more than 50% of the tax credits in year one and will refuse any attempt to request that all of the credit be allocated in tax year 1 and 2. They view this as being risky on their part, and they much rather prefer seeing the tax credits being more evenly distributed throughout the tax years. Once an agreement is reached between the applicant and GO-Biz, the agreement will be made public as is required by the state. This public notice will include the following terms of the application. The public notice will include the projected job growth and investments that will be made, the minimum employee compensation, the minimum retention period, the credit distribution period and the milestones that need to be met, as well as any recapture provisions in the agreement. Once the negotiated agreement has been executed, we'll move on to the award phase, where a final decision will be made by the 5-person California Competes Committee on June 18th, 2015. The committee will accept or reject a credit application based on the recommendation from GO-Biz. It is not required that representatives of the applicant attend the committee meeting, but H&A does recommend that a company representative be present. We can say at this stage, if a applicant has reached the award stage and they do go in front of the committee, there has yet to be an application rejected at this stage. The process narrows down the field, and they are well aware of which applicants they want to award the tax credits to at this stage in the process. Now let's discuss some best practices that H&A recommends to anyone moving to take advantage of California Competes tax credit. Through our experience in California Competes, we feel that presenting the business case of our clients to the relevant parties in California is extremely important. This is because we show the economic importance to the state that the client has been in the past, how they are currently important to the state, and how this project will continue to be important to the state moving forward, and really assist the local area in developing further. We also encourage applicants to carefully determine the amount of tax credit to request. We do know that an amount too high can lead to a rejection of the application by GO-Biz without the opportunity to renegotiate that amount of tax credit. In order to determine the appropriate amount to request, the applicant should analyze its income tax liability. The tax credit amount requested by approved applicants in previous rounds is also a nice benchmark to look at to see if, in fact, you're requesting the correct amount. Additionally, H&A recommends that the narrative of the project be clear and not convoluted. A convoluted narrative could cast uncertainty into the minds of the California Competes team, which could negatively affect the application. For example, if it's a growth project, but it's mainly a retention project, you want to make sure that the message in the summary of the project really spells that out, because if there is any uncertainty throughout the process, they will not move the application into the later stages of the process due to the fact that there are hundreds of applicants each round applying for a limited amount of tax credits. Okay, with that, we end our presentation on California Competes, and we'll open the webinar to questions from our guests attending today.
Hi, Greg. We have a question from Eva. The question is, do the employees in capital investment need to be under the same legal entity, EIN?
That's a good question. Thank you, Eva, for that. They do need to be under the same entity and EIN for the project. However, there is the capability of submitting multiple applications for the two different entities. We can expand on that question in a way. If a company projects that they're going to hire 300 people and they end up hiring more, then those additional employees can cover the milestones. At the same time, you can also apply multiple times for the same entity as long as you wait for the next tax year. We have any additional questions? Okay, we have one question coming in. This question is regarding part of the presentation earlier. If a business is deciding whether or not to remain in California or relocate to another state, must it provide proof that it will relocate absent the award? That's a good question, and it is something that we touched upon earlier. The business will have to provide a declaration of applicant status in Phase 2. In this document, the business will have to state either absent the California Competes tax credit, the project will occur in another state, or absent the California Competes tax credit, the applicant company will terminate all or a portion of its employees in California or relocate all or a portion of its employees in California to another state. This statement must be executed by either the business's owner, president, chief executive officer, or the chief financial officer. Thank you for the question. That is something that is brought up in every process. Okay, well, if there are no additional questions, I'd like to thank everybody for attending today's H&A webinar on California Competes Tax Credit Program. Again, if you have any additional questions, feel free to contact me directly at the email address or phone number shown on the slide. Thank you, everybody, and have a great afternoon.